At this point, a lot of people are looking for economists who saw the last downturn happen before it happened. And one of those people is Harry Dent, the great economist who joins us now by phone. And Harry, I imagine you're looking at this and thinking to yourself, I knew it would happen sometime, but I'm wondering if you think this is really when it's beginning to happen.
Well, you know, we've been telling the people that follow us that you know, we're getting we really turned bullish when Trump got elected. We knew the gravy train was coming and tax cuts, and you can't argue with that. There's nothing better than tax cuts and repatriation. But again, it's a
and deregulation
term thing. And we've said, look, this is the final blow-off rally. The question is, how long does it last? We've been warning our people that, look, there's a high chance that we're going to peak late this year, and now this is the first sign of that potentially. Or if we can keep to a 10 to 15% correction, we could have one more run up in the next year. But the odds are shifting very quickly to this could be it, because we
okay,
really
now hold on a second, Harry, because you throw out numbers here.
I
just want to make sure
the bubbles are off the charts.
Okay,
and so this could be the beginning. Here's the trick, and it's very difficult when bubbles burst, and we've researched every major stock bubble in the last century. The first whack is 40% on average in 2 to 3 months.
40%.
So the problem is it's almost better to hedge. We're telling right now options are cheap. It's better to hedge your portfolio than necessarily get out. But it's better to hedge or get out early, because once this thing happens, it'll happen so quick that people won't know it.
Okay, Harry, I wasn't sure if you could hear me, but the fact is that what you're suggesting is a kind of immediate downturn in the market like I don't think we've seen in decades. What do you think is the cause of this? Is it the fact that we've had these zero interest rates, these artificial zero interest rates for a decade all around the world, and finally the chickens are coming home to roost, or what is it?
Yeah, absolutely. This is the first and only purely artificial long-term rally, and now it is the longest rally in history without a 20% correction. I mean, our demographic factors peaked in late 2007, as we predicted would happen decades before that, and the economy got weak, and the real estate bubble burst. We predicted that just months before it started going down in 2006, when Ben Bernanke said, oh, this is no problem, this is containable, this little subprime crisis thing. So the fundamentals, including geopolitical. We have a geopolitical cycle that has been down since 2001, 9/11, and does not start to turn up until about a year and a half from now. So all the cycles we have are down, and yet the economy's gone up anyway. Why? $16 trillion of money printed, and now trillions of tax cuts, $2 trillion repatriated to the United States. You know, we're the only market in the world making new highs because of the Trump tax cuts. Europe and them have not made new highs. That's another divergence. Also, emerging countries, the emerging markets are down 22%.
Well, I know that's partly that's because of the problem with the IMF. The IMF has been giving them the wrong medicine. Harry, I'm sorry, I don't know if you can hear. I think we're talking over each other there.
If it does, we will probably see the market down 40% by December or January.
Harry, I'm sorry, we're having trouble hearing each other and talking over each other. But two things I would say to you, and I want to get these 2 points in and then give you the final word. One is the fact that the emerging markets are going down primarily because they're getting terrible advice from the IMF telling them to raise taxes, devalue their currencies, do all the wrong things. But secondly, do you completely discount the power of the tax cuts, which did revive tremendously not only the corporate profits, but also corporate investments in, among other things, payrolls, hiring people and training people. Also, the amazing amount of deregulation that's going on, and the fact that you have as president a businessman as opposed to an academic who doesn't much like business.
No, again, we turned bullish with our subscribers that, you know, the day after the election when Trump got elected, we knew it was going to be pro-business. We knew that's going to be another short-term stimulus on top of 9 years of free money and quantitative easing. But again, we're in an economy where we're running out of workers to hire. The workforce is projected to not grow at all in the next decade. Productivity's gone from 3% plus down to 0.5% because the aging of the workforce and baby boomers. Fundamental trends are going in the other direction. So, yes, stimulus short-term always works, but we don't think this works past the next year. My question is this the top, or do we see a top by late 2019? Either way, I see the biggest crash of our lifetimes coming in the next few years, and this could, the odds are, you know, this has got more to show. This is not enough yet. The problem is, again, the first crash after a bubble like this is 40% in the first 2 to 3 months. So if you hang in there to see if it's going to go down, you get whacked really hard.
Okay.
Really quick.
Well, other than that, I think you think everything is rosy. So everything's.
Well, you know, I would love, you know. I mean, we've been bullish for most of my career because we saw the baby boom coming, saw the internet coming, and all this sort of stuff. But every boom goes to extremes, and this has been a bubble. And then you have to correct. We have too much debt. Financial assets are overvalued. The poor millennial generation will never be able to afford to buy a house and make money off it. Never be able to afford to invest for the future
ask me a
at such
poor
high
millennial.
valuation. So
a
correction, a big
Harry,
correction over the
I'm
next
so
year
sorry to
would
do
be
this,
very
but you're
good
going to have to cut him
long-term
off because
for
I don't
our
think he can hear us. So, Harry Dent, you've been right before. It is important for everybody to listen to everything you have to say. You may not be right this time, but that is one end of the argument. Harry Dent, great to have you on.